Okay, so here is the 80% win rate Bitcoin strategy. I don't need to shout and hype it. I'm just going to show you and I'm going to walk you through the strategy. But first, here's the back test. It's absurd. So here we see an 82% win rate, 82.5% win rate. There's 40 trades going back to, on this one, I think 2015, so 10 years on the Coinbase chart. And profit factor of 10, so makes $10 for every excuse me, makes $10 for every dollar it loses. This is the highest number I've ever seen personally. For me or for anyone else. Just being above 1 is profitable and 2 is really good. 10 is unheard of. And here we're seeing a 2 million% increase for a 42% max drawdown. And if we look at the buy and hold equity here, um, it just doesn't even look like it moved. It's almost a flat line. Here we can see the max drawdowns. Looks like the biggest drawdown. It had a number of 1, 2, 3, 4, 40% drawdowns. Anyways, so again, if you guys understand backtesting and so on, you're in the right place. This is like a holy grail strategy. Now, that said, takes 10 years, it's just a backtest, doesn't indicate the future. Although we made the system in this time period in like June, and it's performed excellent since then. I'm going to show you some things that I really like about this system, but this isn't a Bitcoin only system. I only changed one thing, and that was I actually turned the dip buy off. So it's interesting. I'm saying that for Bitcoin, and I might still trade dips, but turning the dip buy on, wait, I went to 13 million. That's crazy. Let's look though. Let's compare. Turning the dip buy off potentially improves results. So let's compare. We're seeing a 13 million% return with the dip buy on, but it's a 40% drawdown. So let's compare a 40% drawdown to a 40% drawdown so we can see which gives better risk-adjusted returns. And we see here that if we actually adjust the drawdown with the dip buy to 40%, it's 176,000% return. So really, okay, so really surprising to me that actually disabling the dip buy for Bitcoin improves the results. And I'll tell you why I think that is, and another benefit of it. One of the reasons why is Bitcoin is a reflexive asset that attracts leveraged traders, and is a lot of it is based on hype and speculation. Now we can see that it does move up and to the right over time, and I expect that to continue, but it's had a history of extreme booms and busts. That might not continue anymore with the Bitcoin ETF and it being accepted as an institutional asset, but it definitely might. And when you have an asset that has significant bear markets, it's having like extreme bear markets in this asset, do you really want to be buying the dips? Or would you wait and just be selective and participate in the rare occasional bull market cycle? So the data is showing that that is superior. Now, another thing that I like about this is there's a couple things. First off, not having to trade or do anything or hold or be stressed out during these bear market periods. But also, if you're like me and you trade leverage, and I like to trade leverage because here, this system pyramids, it dollar cost averages, right? So it's building positions, one, two, three, I might have 4 positions running. I want to make that position as large as possible, and I can finance that position with the profit, open profit of the previous position. Well, if you're trading long-term holding with leverage, perpetual futures, you need to pay a holding fee. And when you're in the market less and more selective, you don't spend as much money on fees. But this does a really wonderful job of sidestepping the bear markets. This is why it outperforms buy and hold by so much. And let's go ahead and look in at some of the trades. Now, it's dollar cost averaging breakouts with a stop loss that advances. The stop loss is another reason it outperforms buy and hold. Here it looks like it actually closed on the day of the, that's amazing. It closed on the day of the top and didn't re-enter. And honestly, the back test and win percentage are going to be higher because there's certain bugs. It's I don't want it. Oh no, that's not true. Yeah, we'll just go say it is what it is. But I mean, 80%, 4 out of 5 trades or wins is crazy. You can see how good it is at closing right on the top, right on this day, and it's um, done the same thing right up here. Might go higher, but it's done a great job of doing that. So, um, what it's doing is it's buying breakouts, looking at old levels. It's using a really wide stop, and I found that to be much better. So you might ask, well, when you're trading a breakout, don't you want a tight stop? Well, I found wanting a really wide stop is much better. A really wide stop is being a 5 daily ATR stop. So price can move 4 average days against you and you don't get stopped out. That's what allows it to stay with these such big trends and also to have an 80+% win rate. Here, does it get out at the very top? No, it doesn't. That actually gets stopped out at 8,000 and holds a 50% decline there, but the first entry was 1,000, so it's an 8x, and the second entry was 3,000, so it's a double there, and then 4,000. Actually, you know what? I think this is supposed to be for the TP, it's supposed to be 15, so that actually might improve things. Not 25. Is that gonna cause it to get out? Nah, just barely. If we really want to cheat and make it even better, which isn't, and actually that made it worse anyway, so let's just stick with what we have. Okay, so let's look at some other periods here. Did it catch the entire move? No, but it bought the exit of this, bought again, TP'd here, and then didn't do anything for a while. Here was a rare loss. 1 out of 5 trades here is a loss. We can look at just almost every trade because it's only 40. Here is a win. It bought here and it ended up closing here. Okay. Now here's where the 5 ATR stop is so good because it allows price to move against you and to stick with it. So it bought on this day and it held through and it bought on this day and it's kind of trailing the stop. And then it buys on this day and it actually takes profit all the positions right at the top. Really really impressive. Here it takes a trade and then closes it. I'm curious. We're gonna make an adjustment. I'm curious if it's gonna improve or hurt things. Um, on the peak sell, I'm not just trying to optimize. Like I have this idea. Okay, that improved things. I'm gonna leave that for now. So the idea is, what if the we check to see if there's a failed breakout in 2 days. I changed that to, is the breakout gonna fail within 3 days? So that just improved from 2 million to 2,483,000%. And in this one, it got us out at a very small loss instead of a full stop loss. Now we see over here, bought this breakout right here. It bought here, it bought here, it held, and then it TP'd everything right up here, and then it does nothing. This is the most amazing thing. It closed on the day of the top in November 2021, and it didn't take a single trade until January 2023. So over a year. It buys here, it buys here, it buys here. It holds through this. Ends up TPing a lot of the positions on this day. But buys one. Ends up closing it up here. Looks like it has another buy. Closes one, holds one. And this is where it gets stopped, and I feel like it shouldn't take that trade because the breakout failed. Um, Anyways, it's all good. And then does nothing for a little while. Didn't buy the bottom, no, but also didn't ever hold during the bear market. Bought a breakout here, bought a breakout here. TP'd up here. This is also where it's not supposed to take a trade. So the real win percentage is going to be better. Why? Because when it fails a breakout in a TPs, it's not supposed to take a trade. Ends up getting stopped out right here. Okay, then it buys at 50, holds through all this mess, buys again at 65, buys again at twice here actually at 28 at 69 and 72, and then it closes most of those positions right up here at 102,000. So I don't know, if you ask me, pretty amazing system. And it makes me excited for the possibility of bear markets when they happen, because you can see the most gains happen not when the market's at a high price, but coming out of a bear market. Now, we could continue from here, but this would be the first time that the chart has looked like this, and we just continued. I'm not saying we need to have a major bear market, and I'm not saying we can't continue, but it seems pretty possible that price is gonna either go down or just consolidate for a long period of time. But price action might change with the ETF. Anyways, if you guys are interested in how to trade in this way, or you're interested in the system, there's a link down below. Go check it out. Okay, appreciate y'all. Much love. Talk to you all soon. Peace.